Do you have any particular top tips, if you can highlight a couple, for trading around the NFP, how to prepare, how to react?
High expectations for the NFP is usually bullish for the USD, so that's how I use it on my trading strategy.
So many traders hear about the NFP constantly, but what does it mean overall?
It's so market moving or major for traders because it influences consumer spending.
Is it possible to say that when you get a positive surprise from the NFP, you can usually expect the market to behave a certain way, and the opposite when it's negative?
First thing first, you need to know the expectations.
Hello and welcome to this week's episode of Exness Trading Talks. Last week we talked about central banks' decisions, and now today we're going to be talking about the NFP, more about what it is, what it means for traders, and how traders can use the NFP as part of their strategies. If you haven't done so already, I would encourage you to subscribe and turn on notifications so you'll be immediately aware when next week's episode of Exness Trading Talks comes out. I'm Michael Stark, Financial Content Leader, and joining us today to give his insights and opinions is Antreas Themistokleous, Trading Content Specialist. Welcome, Antreas.
Hello, Michael, and thanks for having me.
Thank you for coming on. And the first question, I suppose, is less, what is the NFP? We will discuss that. But I think the bigger question is, so many traders hear about the NFP constantly, but especially newer ones, they might not really be aware of what does it mean overall for traders. So can you shed some light on that for us?
Yeah, so NFP stands for Nonfarm Payroll. It's actually a monthly report that comes out usually the first Friday of every month. It's released by the US Bureau of Labor and Statistics, and it's essentially the job report from the States in combination with the unemployment data, of course.
Yeah.
So it's so market moving or major for traders because it influences consumer spending and eventually GDP, which in turn affects the Fed decisions. So that's why it's so important, because it's more or less directly affect the Fed policy and interest rates in general.
And how do you think that in general traders use the NFP, all the data from the NFP to make decisions? And I think more importantly, more interestingly, how do you personally, for your own strategies, use the data from the NFP to make decisions, decide what to do next?
Okay, so it's important to clarify here that market moves not on the actual release, but more on the surprise and how that could affect the interest rates. For example, if we have an expectation of 200,000 jobs being created for that month, and then the actual figure comes out at 300,000, let's say. So that's bullish news, especially for the dollar, and not great news for the pairs traded against the dollar, different pairs like the euro or the pound, but as well as gold and Bitcoin, which are also priced in USD. So high expectations for the NFP is usually bullish for the USD. So that's how I use it on my trading strategy, let's say.
Yeah, so I would just add my 2 cents there. You're right. I would just add that, I mean, we've seen a recent trend over the last several years of the expectations for the total non-farm itself being pretty consistently low, like not ambitious enough. And most months, some exceptions, but the majority of months, the actual figure beats the expectations. So that's why I think in general, for right now and maybe into the future as well, it's maybe important for traders to focus more on negative surprise than on positive ones, because a negative surprise is less likely, other things being equal. So let's break it down a bit. We've got the total non-farm, which we just talked about a little bit, but there's various other specific items of data, various other specific numbers that come within the overall NFP. Can you discuss a little bit more about them? Which ones do you think are more important? Which ones less for the average trader and also for yourself, if relevant?
So the most important part is obviously the headline NFP, which tends to moves the market, right? The headline figure, but we also get unemployment rate, which is in combination with the NFP gives us an overall picture of the labor market in the States. So when we get lower unemployment rate and higher NFP, that's quite bullish for the US dollar. But we also get the labor force participation rate, which is not that important. It's good to know, but it rarely moves the market, right? And we also get revisions from previous months, which is often overlooked, but when we get sharp revision, especially to the downside, it usually creates volatility, especially in the immediate aftermath of the release.
And ranking them in order of importance, maybe I would say cautiously, total non-farm number one, followed by unemployment rate, followed by average earnings.
Yes.
You think so? Yeah. Okay.
Yeah.
More or less.
The rating, more or less. Yeah, I would agree with that. Yeah.
But of course, it depends on overall sentiment, and it depends on the market. Is the market more focused on inflation right now and monetary policy, or is it more focused on growth and possible recession? So that can, of course, vary from month to month depending upon the environment, right? So let's look at some typical scenarios, or let's see whether there are any typical scenarios in your opinion first.
Yeah.
I mean, is it possible to say that when you get a positive surprise from the NFP, you can usually expect the market to behave a certain way, and the opposite when it's negative?
Yeah. So usually we get like three scenarios.
Yeah.
Either the actual release meets expectations, or beats expectation, or fails to meet expectations. So we have these three scenarios. So the easy one is when it meets expectations, we don't get that big of a move, because expectations were, let's say, 100, they got met, already priced in, we're moving on, no big moves there. Now, when we see the actual figure beating expectations, that's when we get big spikes initially right after the release, but then we see like a slow fade out of that spike.
Yeah.
Now, when it fails to meet, we get big whipsaws, which tend to hit the majority of stop losses, because it goes down and then it recovers. So it kicks the majority of traders out, hitting their stop losses, and then it recovers to the upside. So in general, it's not always like that, but in general, that's the three most common reactions on videos.
Yes. Yeah, it makes sense. I mean, and you're right to point out, of course, in general, because depending on the specific circumstances recently we've seen with tariffs, and we've seen also with, general political context, then these things could be more or less important, and you might have different behavior based on who is actually participating in the market that time, and seasonality, of course.
Yeah, exactly. External factors always play a role. It's not just the number.
Yeah, quite.
If it was just the number, it would be very easy to trade, right?
It would be, yeah. That's true.
Just follow what the NFP comes out and
quite. So now let's talk a little bit about some practical tips for trading the NFP. And we won't go into too much detail here, but I would encourage you, if you're watching this, you do want to go into more detail about how actually to trade the NFP. I would encourage you to check out the article, which is linked in the description just below here, where you can read more detail about how actually to trade the NFP and some possible approaches to doing so. And also, if you would like to get specific ideas, not just around the NFP, but in general, you would like to get some ideas for trading and more context about markets, please sign up using the other link below and receive the weekly report. Now, coming back to the tips, do you have any particular top tips, if you can highlight a couple, for trading around the NFP, how to prepare, how to react?
Yeah, so first thing first, you need to know the expectations. You need to know the forecast, right? And then you decide if it's realistic enough to hit that expected figure or not. Personally, I tend to stay away in the first 5 minutes because, volatility spikes, we get a lot of chaos happening. So I tend to stay out for 5 minutes. It's just 5 minutes until the dust settles, and then I initiate any trades. Now, if you want to trade the actual news, you can pre-position yourself prior to the release instead of trading when all chaos breaks loose. Because when you pre-position yourself, you get a clean image of what's happening. It's based on technicals and sentiment. Yes, it's more risky pre-positioning, yes, because you never know what the actual figure might be, but you get a clean image. So I tend to pre-position myself instead of trading right after the release where volumes are crazy high.
I think the case in point there was, I'm not sure whether it was 2022 or 23, but it was very early in the year. It was in January, one of the relatively recent years. And at the time, everybody was saying like, oh man, watch out, recession, the crash is coming, oh no, woe is me, etc., etc. And then the NFP for January was expected to be about 100 and something thousand, and it came in at slightly more than 500,000.
Yeah.
And I remember watching it come out and thinking like, what? Surely that's not right. And then just, after having that knee-jerk reaction, thinking, okay, I'm just not going to do anything here. Like maybe leaving money on the table, but I mean, being a bit more, avoiding this kind of chaos when you get this very unexpected release, I think is maybe a tip for some traders.
Yeah, because when you get excessively unexpected figures, you can probably expect for a revision next month.
Yes.
So it's not quite accurate, which does not reflect on the market.
Mm-hmm.
So yeah, when you get excessive numbers, it's again a red flag.
Mm-hmm. Yeah, quite. Okay, so thanks very much, Andreas, for being here for Exness Trading Talks.
Mm-hmm.
And next time we'll see you again when we will be discussing a bit more about understanding inflation and how inflation affects various other factors within financial markets. If you haven't done so already, I would encourage you to subscribe, turn on notifications so that you'll be aware immediately when next week's episode of Exness Trading Talks has been released, and hopefully see you there.